Okay, fam, Tom Lee's dropped some bombshells on the stock market, the pullback, Donald Trump, Nvidia, what's going on and where he sees the market going. Don't worry about the subscribe button, tapping the like button, or looking for the Discord and coaching link just yet. We want to listen to what Tom Lee has to say. Let's put our thinking caps on. But first, I want to make a huge announcement to you guys. This Friday, November 22nd, my free retirement masterclass webinar. You don't want to miss this. Friday, November 22nd, 8 p.m. Eastern, 5 p.m. Pacific time. Limited spots available. Link is in the information box below. My students will tell you they've learned more in the hour they spent with me than they did anywhere else. If you guys want to learn how to retire early and collect passive, consistent, safe income, you want to be there. Limited spots this Friday, November 22nd, 8 p.m. Eastern, 5 p.m. Pacific time. Link is in the information box below. I'll be hosting a Q&A, answer your questions, and I have a huge announcement, so don't miss out. Let's listen to what Tom Lee has to say about this market right now.
Join us now, Tom Lee, head of research at Fundstrat Global Advisors, as well as a CNBC contributor. We can get to Bitcoin in a second. I want to talk just about the overall markets, Tom. And you think leading into Thanksgiving that slow sort of slow bleed last week in the markets, you expect that not to be lasting, and multiple factors make you feel good about the next couple of weeks. And one of them, which plays into what we've been talking about all morning, and is the Treasury Secretary announcement will remove some uncertainty. You're following Polymarket to see who's in what. Bessent was at 70, but then Musk tweeted about Lutnick, and his chances went up. What is it now?
They've both fallen to sub 40%. So part of it is Kevin Warsh has moved up and Mark Rowan has moved up.
We're using Polymarket to decide who's going to be the Treasury Secretary.
Stranger things have happened, right?
So you think we hear this week? And that'll remove uncertainty, or that's not the most important thing?
Well, I think as we remove uncertainty, so it may not be announced in the next week or so, I think that's like what I'd consider a clearing event. It takes away some uncertainty, and the Trump trade, I think, is still intact.
The Fed might not cut as quickly as possible, but you still said we're in a good place, dovish-wise.
That's right. Last week, markets were a little taken by surprise when Fed Chair Powell said he might, slow things down for December. But if you look at December 2025, a year from now, the number of implied cuts is still the same. So I think he's dovish. He's just moving some of the timing.
Another clearing event, Nvidia. You expect it to be a bullish clearing event?
I mean, most likely, I think markets get very hesitant in front of Nvidia's earnings.
Really?
And once that's behind us, we'll see demand is strong, and I think market breathes a sigh of relief.
And then we did get a little bit maybe bullish or over our skis, so we pulled back to a support level where you feel more comfortable.
That's right. I think most of the major indices have pulled back to what would be technically viewed by our technician Mark Newton as support. So the NASDAQ is on the support line. S&P did a 60% retrace of its recent rally, and small caps have held above their prior highs. These are all bullish support levels.
I was wondering whether things were getting overdone when the journal says a melt-up could be in the cards. And the Trump trade has already been going for a while. You think it's just getting started at this point? There's a lot probably for the markets to like, I guess, in terms of, he likes easy money, he likes low regulation, he likes lower taxes. There's a lot. It's more than a 2-week rally, maybe, in your view.
That's right. And I think maybe markets are course correcting because now with DOGE, the Department of Government Efficiency, there may be cuts to healthcare and industrials because of defense spending. So things that investors can focus on more deregulation of animal spirits, more like small caps and financials.
All right.
What about healthcare? You mentioned that in particular. It's not just DOGE that's going to be looking for more ways of efficiency. It's also changes afoot with RFK Jr. We're going to speak with Mark Bertolini about that in a minute. But how does the market kind of weigh that out?
Yeah, I think it's going to be a tough period for visibility for healthcare because, even recent comments about how much healthcare spending dominates advertising when you're not in the political cycle. And you're right, there's concerns about safety of certain vaccines and RFK being in charge of HHS. So I would just say there's clouds. There's still going to be opportunities probably in biotechs, but it's going to be challenging.
So Tom Lee talked about a lot of things. We're going to touch base one at a time with each of the statements that Tom Lee made, talking about the market. First, with the Feds being dovish, the market's kind of pulled back a little bit last week, and there's multiple reasons for that. There's headwinds with Nvidia earnings. We are a little bit skeptical. When I say we, I mean us, investors, institutions, the market. Always kind of a headwind prior to Nvidia earnings. There'll be some relief, Tom Lee said, after Nvidia earnings. But it's not only that. There's also other issues in the stock market, and one of the issues is basically the Feds and the interest rates being cut. And very recently, Jerome Powell and the Feds made a statement about maybe pushing back some of the Fed cuts that they expected in November and December. But that's not going to change anything, because as we go out to November and December of 2025, all the same amount of rate cuts are still in play. So nothing's really changed. Just a little bit of the timeline has been moved a little bit. So the remaining number of rate cuts remain the same. And right now, demand is strong in the market, Tom Lee said. It's breathing a sigh of relief due to the fact of what's going on with the Feds. We also have to look at RFK taking over the health department, and that's going to change a few things as far as health stocks or pharmaceutical stocks are concerned. So really, the financial stocks as well as small caps are going to do the best. That's what Tom Lee had said. And right now we're course correcting into that. We have very bullish sentiment. And he was explaining how the NASDAQ, the S&P 500, as well as small caps are sitting at support levels. The S&P and the NASDAQ are both at support levels, and the small caps are at a support level at a higher low, and they're holding their higher lows right now, and they have not pulled back. This is all bullish sentiment and bullish signals in the market. I'm going to show you guys on the chart Nvidia. We can make some trades for Nvidia ahead of earnings. AMD will also be a sympathy play, so I'm going to have a trade for Nvidia and AMD. We got to be very cautious though, as I am not entirely sure how much Nvidia will beat earnings. No one truly is. And if they don't crush earnings, it's likely to have some more of a pullback. Look, if all of this is confusing you and you really don't understand the market sentiment, what I'm talking to you guys about, the healthcare department, the government, the Fed's cutting rate, all this technical and fundamental analysis on stocks, if all this is confusing and you are looking to retire, maybe retire earlier or retire now, or you're just looking to grow your portfolio and get into trading and investing and learn, I would love to help you. I offer full Discord and training course and one-on-one coaching. And look, I grew up in a Catholic household, and I told myself that I would help others achieve financial success. My parents were hard on me to do the right thing to help others. And after my almost bankruptcy 6 years ago, I told myself I would help others the way my father helps homeless veterans, which I help him with that as well. But I set myself out on a path to help others. And I have students that have turned their $8,000 portfolio into $27,000 in 4 months, and others that went from $30K to $70K in the same 3 to 4 months. If you guys would like to make these kind of gains in your portfolio, I would love to help you. You guys can sign up at investorcorey.com. Link is in the information box below. But don't take my word for it. You guys can hear what Adam, one of my students, has to say about my coaching.
So I started with $15,000, right? I am now at $40,000. Okay. And I'm so proud. It feels, amazing to be able to share this, because I know that there's so many people that will do the same, right? You have to just trust Corey and trust what he's teaching and what he's offering, because he means so well.
So you heard what Adam had to say. All of my students are making really good strides, but that's because I am committed. I don't like to lose, so I don't lose trades. And if my students lose, that means I'm losing. And like I said, I don't like to lose, so I put 110% into coaching and helping you achieve all of your financial goals. I look forward to seeing you when you're ready to jump on board. Let's take a look at the chart on Nvidia and AMD, and I'll give you guys a general idea of what's safe, of where you could enter the stock if you haven't already with cash secured puts, or if you already have the stock, I wouldn't sell covered calls at all, because it could go to the moon. And if you're going to buy shares leading into earnings, you could also wait for the stock to go up after buying the shares and then buy a put and sell a call. If you sell a covered call above the strike price of where you expect the stock to go, it will finance the cost of the put you're buying. So let me show you what I'm talking about. You could buy the shares on Nvidia for $140.95, which is where it's at in the overnight hours right now. And then if you buy it, you wait for the stock to go up a little bit, maybe to 141, 142, 143. Once you see that it's going up, you'll be able to buy a put. It'll be cheaper. So if you want to buy a 141 put, then you wait for the stock to go to 143, because when it goes to 143, it would be $2 above 141. So it would be the equivalent of a 139 put right now in cost, 565 versus 670. So it'll drop $100. The stock goes up $2, the put's value will drop by more than $100. So you'll be able to get a 141 put when the stock goes to 143 for about 500 to 550, because it's going to be a little different due to theta, which is time decay, tomorrow into Wednesday, because it's Wednesday is when earnings are after hours. So if you wait for the stock to go to 143, 144, and you wait till close to Wednesday to do this, you buy the shares now or today, Tuesday, and then wait till tomorrow for the stock to continue to go up before the market closes, you should be able to buy a 139 or 140 or even 141 for less than $500. So let's say you buy this put for less than $500, because 139 right now is 565, and if the stock goes up $2, that's what a 141 will be worth plus theta decay. So probably closer to 500. So what's the overall premium that you will get for selling a covered call? Well, if we sell a covered call, we could get about 400 if we sell a 146, not giving us a lot of upside, but if the stock goes to 143, that means we can get the same 395 at 148. So as you buy the stock right now at 141, it goes up to 143, you get the put at 141 for right around 500, and then you will get close to 400 for this call, meaning you're only out $100. If the stock tanks to like 110, it won't matter because you could sell your puts for 141, which means you lose no money except the $100. So virtually no loss. If the stock goes to 148 and your cost is 141, you made $700 minus the 100, so you're up 600 on every 100 shares. And you could probably tighten the spread of the bid and ask on the put and the call so they finance each other a little bit closer. Worst case, if you did 5 contracts on this, you could lose maybe 250 to 500 if the stock plummets. The puts would protect you, but if you end up getting assigned on your calls, well, that's great. You'd make 600 per contract, $3,000. So you're really risking maybe 250, 300, maybe a little more that you could potentially lose with buying the put and selling the covered call to finance most of it. So it's very small loss, but you can make 3,000. So you think about the return, you're really risking 50 to 100 to make 700. So it's a 7x return. You buy the stock, wait for it to start going up and see some peaks before the end of day Wednesday, sell a covered call $4 to $5 above that, and then buy the put at your entry of the stock price, okay? So you buy at 141, the stock goes to 145 by tomorrow, you sell a 149 or 150 call, buy a 141 put. The difference between the two, maybe $50 to $100 out of pocket. That's the most you can lose. The put will cover you. If the stock runs to 150, you make like $1,000. This is the best way to trade earnings on Nvidia. So what you're going to do, like I said, buy the stock. Then when the stock runs up, you will sell a covered call to make $300-400. And then the 141 put that you're entering at now, same strike price as where you entered. Well, if the stock goes to, say, 145, that's $4 out. That'd be the equivalent of 137, 136. So we could look at those 475. So if you play your cards right, the stock goes to 145. Well, then you could get your put for about 450 to 425, and you'll get your 150 call. It will be the equivalent of a 145. So 430. So almost break even. You can almost break even from the short call that you're selling and the put that you're buying to hedge your position. Now, I know I've said this a couple times, so I want to make sure you guys understand this. You're going to enter at 141, wait for the stock to go up. Hypothetically, if it goes to 145, sell your 150 call and immediately buy your 141 put. And I'm just explaining to you that if the stock goes to 145, buying a 141 put would be the equivalent of buying a 137 put right now, which is 475 minus another day of theta, about 425. Selling a 150 call would be the equivalent of selling a 146 call right now, which is $400. So you're only looking at a $50 spread. So even if the stock plummets to $50, you're only going to lose $50 because the put is worth $141 no matter what. And the covered call you sold covers all of your losses except roughly $25 to $50. You see how that works? But then if the stock runs to 150, then you're making $900 minus 50, $850 profit. So you're really on this strategy, you're risking 50 to make 800 or 900. This is the best way to trade Nvidia, and the exact same thing goes with AMD. It's a very simple formula. Buy the stock, wait for it to go up today and tomorrow. When it goes up, go above a few dollars, sell a covered call, then go near your strike price of your entry. So if you bought AMD for 140, buy a 140 put. This is what you want to do. This way, the put's worth less because you're buying it while the stock is going up and using the covered call way up top to finance it. And if the stock plummets, that put protects you. If the stock runs and you get assigned, you make premium. This is how you do it the safe way, fam. And if this is confusing you, I offer this along with many other strategies, in-depth and one-on-one coaching to help you guys retire and understand stocks and options. You guys can sign up at any time. InvestWithCorey.com. Link is in the information box below. And don't just take my students' words for it. You can see on the screen my portfolio. I'm up over $30,000 in 3 months and over $15,000 in 1 month. And I don't even overtrade in this account. And I'm taking a very conservative approach. You guys can do it too. I lead by example. If we look at this chart on Nvidia, we can see that the floor right now is about 137.50 to 138, which it's resisted heavily right here. We could see some consolidation into Wednesday and maybe closer to earnings, it'll run up and then drop and get really volatile. But if they crush earnings, it's going to go back up. If they beat earnings, it might end up somewhere around here or here. If they don't beat earnings by much or just barely hit the target, then it's probably going to drop a little bit down to 135, maybe 133. It's hard to say, but with Trump winning the election, it's more or less likely that it could consolidate, come down, and we could see a price between 137 and 142, maybe 144. So I would say realistically, I'll give you guys a green line of what I'm thinking here. If they meet the earnings, they meet the expectation, then I say we're somewhere between the red arrows. Somewhere between 143, 138 to 143. If they crush earnings, we could probably end up 150 plus. If they don't beat the earnings, which is very rare, I can't see that happening. This is going to be a nightmare if that happens, I'd imagine. So realistically, my price target for Nvidia is going to depend on what they do. If they crush or even beat decently, we're up here. If they just barely make it or they're just meeting the expectation, just coasting through, we could see anywhere between 135, 145. So it's going to depend. That's why I want you guys to hedge your position on this. AMD is also going to be a sympathy play. This is perfect for shares and leaps, but my strategy is best with the put and the call. Buy the shares, wait the stock to go up, sell a call, go down and buy a put to hedge your position. It's called the caller strategy. Don't forget, guys, free retirement masterclass webinar this Friday, November 22nd, 8 p.m. Eastern time, 5 p.m. Pacific time. Gonna have a Q&A to answer all of your questions. Huge announcement during the webinar, and all my students say they learn more with the hour that they spend with me than anywhere else. I hope to see you guys there. Limited spots remain for this webinar. Link is in the information box below. I will see you guys there. Thanks so much, guys. I'll see you on the next upload.